AI space was going to interact with crypto. And yeah, I eventually got in touch with you and the team. And I mean, the architecture is incredibly elegant. I think you guys are addressing an incredibly potent space, which is yield. And as we see kind of all these stable coins come online, I think aarnâ is incredibly well equipped to address the demand for yield for all these stable coins, whether they're going to be, the current stable coins, the up and comers, or even exotic assets. I think there's a place in aarnâ's architecture for all of this as far as yield goes. And I think that's going to be an important thing for onboarding consumers. Obviously, we saw Luna last cycle be incredibly important as a consumer product to adoption. And I know aarnâ offers incredibly competitive yields right now. So I think that aarnâ sits in this interesting space with the intersection of AI and crypto, and then also this other kind of DeFi stablecoin and yield narrative that is going to be incredibly potent, and we're going to see a lot of growth over in the next couple of years. So excited about the positioning, at the crossroads of those two stacks.
Yeah, I think, and you're right. I think when I first spoke with you almost 2 years back, a little more than 2 years back, was just when I was starting out on the idea of what tokenized asset management would be, and through the whole ideation and working through over the last year and a half around just the architecture of what this would be has been a fascinating journey for me along with my team, and then we obviously started building out through that as well. And sort of on-chain asset management exists in DeFi in different forms. For example, yield is a big one. We've got the big ones like the OG of the space, Yearn Finance, which was all around yield optimization. And then we've got newer big ones like Maple, for example, all yield. And there are other elements of the entire asset management stack, for example, leverage, for example, indexes and stuff like that. But to put together a composite full stack asset management platform on chain, which is able to be the infrastructure to build multiple structured products, just like in TradFi, you would have ETFs, mutual funds, all sorts of structured products, which have really been the force behind wider adoption and scale in TradFi, and that's why more than 36% of all TradFi assets go through asset management. Crypto, that's only 3%, and the trajectory is very clear. This 3% of managed assets within crypto is going to grow to 10, 20, 30% in a very fast time. And we need full stack asset management, which is both the infrastructure and the application to be able to address a complete life cycle management for crypto or digital asset users. And that's what sort of we ended up building aarnâ into. And and it's a very evolving space, and it's important to have the right the right narrative to be able to sort of convey what aarnâ and on-chain asset management is as well in the crypto DeFi sense. And I think that's something that I've seen when I interact with, for example, degens in the space of it's degens are used, for example, running their entire yield loops, doing everything and complex strategies and structures, and Justin, you've been doing that, so you'd identify with that. But the idea is, how do you put a complete structure like that into a vault, so everything is managed, not just the yield optimization, but also the sort of the risk side of it is managed in the vault. So that's what we've kind of built over the last 2 years, and here we are sort of in the market with multiple structured products. And Justin, what's been your inspiration? I know we had a chat almost over a month back, and then when putting together Quintet program since the last 3 months, and reached out to you, and awesome to have you on board as well. What struck you that would be sort of interesting to hear?
Yeah, definitely. I mean, obviously, like I've been again like super deep into DeFi, but also like again both on the stablecoin side and then also on the other LP side of things as well. So I'm not a stranger to all that. Again, like I chased Luna at the early days. Obviously, Anchor Protocol was not sustainable, but we saw the attraction of it, of capital, and then also interest of getting like really high rates on just holding stables. And so the question that was asked at that time, was like, well, if you could be earning much more than the bank would, then why would you hold money in the bank? But when it comes to DeFi, now you could do it in a more decentralized way, and you can also take custody of it yourself as well. And that you're starting to get to the full kind of, to me, the truly kind of unbanked vision, which I really like. But still, even then, as like a DeFi user, now we start seeing the proliferation of like all these different chains, L2s popping up every single places, all these other different strategies, DeFi protocols as well. Yeah, I mean, it becomes super hard to be able to find the best yields for the stables. And I used to do it manually myself. Like I would just keep looking at some other, like, I wouldn't say aggregators, but like other looping and auto compounding DeFi products out there, and just able to find like the best yields. But then I had to go bridge it out myself manually. I'd have to go move it on to different L2. And who knows? Like the strategy can keep changing because of different incentives, bonuses on different L2s, all that stuff too. So the behavior was already there. I was just trying to like max, like even like that 2 to 5% extra APY, which goes far. You compound that, and then it can continue to stack a lot more. And yeah, it's just like a normal behavior. And I've always told people too as well, like part of the degen strategy that I've been doing now is like go to meme coins and some of the more aggressive, like super high alts, as the more aggressive way to kind of multiply or gamble as a degen. But what always interests me after that is like taking your wins and then just keeping it into that vault, that DeFi vault, to kind of continue to accumulate and even grow as well too. So that's why when I saw Aarnâ, besides the fact that we're able to kind of make the most yields, also too, like what also attracted me, guys, as well. You guys are on like all the popular DeFi chains that I use, both stables and all the other DeFi protocols, which is Sonic, Arbitrum, ETH, and all the other places as well. So it kind of felt more like home to me to kind of get involved with it. It's all the places that I currently am, and the way to be able to just, I guess, have the vault, find the best strategies is kind of the best way for me to kind of like at least diversify or put in some of my stable funds or DeFi funds into, to kind of camp, and just continue to accumulate growth as well too. So that's kind of been my approach and thoughts as well. But seeing things from like, again, like yield aggregator to like what you guys are doing on Sonic as well too, getting triple layer yields as well too. I mean, that's as like uh, max DeFi stacking as you can get. Instead of just getting like the base yield, which I always love as well too. So that's always been my favorite, to try to find those options. And seems like both ATV and ATV USDC as well too, which we could talk a little more. It's just that DeFi composability, and then in the future just getting on across different protocols, different chains, and just having that all kind of managed is kind of the vision and goal.
All right. I mean, it seems from both what you're saying, Jack and Justin, yield is obviously a very important component of DeFi users' investment or deployment portfolio. Everybody's looking for that alpha, of course, and that alpha could be a risk managed alpha in terms of investing into deploying capital on tokens which are going to generate that order of magnitude return, and at the same time look at the top tokens, top alts, of course, leaving aside along with Bitcoin and all, Ethereum, the other top alts, which will generate sort of longer term alpha for most of them at least. So you've got this basket of token investments that most people would look at deploying into, plus yield optimization, which is going to be is always been an important part of the investment strategy. Now, given that context and where the markets are right now, what are your thoughts? Where are we heading? Where the market is right now, we've seen it being extremely volatile for right from the beginning of the year. Really, I mean, we've run. We have the Alpha 37 deep learning framework model, which is designed and trained to predict top tokens, and we've seen that the training of the model and the kind of drawdowns it was used to handle changed completely since Trump came into power. And we've seen the markets kind of, especially in the first part of the year, yo-yoing so much. And the drawdowns have been sort of very deep, and then they recover. So it's really difficult to put almost like a stop loss sort of algorithmic hard stop loss in place. It has to be a dynamic one. But overall, where we are right now, we've seen in the last few weeks calls of a breakout happening in the market, all season being here, and then again everybody goes back to saying all season is over, and this crazy loop is going on and on. Where do you think we are heading from here to the end of the year?
Jack,
I'll take this one. Yeah, I'll take this one to start. It's funny. I just saw a tweet last night where someone was saying that this was the most disappointing crypto cycle ever, and my cheeky response was that the cycle hasn't started yet. And obviously, that to some extent that can't be true, right? We had Bitcoin go from $18,000 or whatever to $120,000. So obviously that there's been a Bitcoin bull market, but really, I think outside of Bitcoin and a few other kind of majors, we've seen a very kind of lackluster alt performance across the board. Here and there have been kind of some bright spots. Obviously, Ethereum is having a bit of a comeback now, for I guess some reasons that I won't get into. But we've seen some assets do perform well, but I think generally what happened in previous cycles was people could just kind of hold on to altcoins and expect outperformance relative to Bitcoin. And that has been different this cycle. And we've seen the bifurcation. There's been either an asset, you've been able to either pick, specific outperforming assets that have done well, which is hard to do, obviously, or there's been this kind of embracing of the kind of like meme coin gamble-fi space. And other than that, we haven't seen this kind of like the tide raises all boats as we have seen in other cycles. I think it's totally possible that we still get a version of that where altcoins just across the board generally outperform relative to something like Bitcoin while Bitcoin is going up, which is when you really see kind of these like powerful returns. But we haven't seen that kind of like 2020, 2021 style frenzy where, you could just buy a DeFi coin and expect it to go up 10x or whatever. So that's kind of the market until now. It's interesting to look at, Ethereum and the trading volume on Ethereum, and you see that a lot of the movement of Ethereum isn't guided by activity in the ecosystem, but by external pressures and kind of people running back the same Bitcoin trade and obviously these, treasury organizations. So, but I do think that it's possible that we still get an alt season, as people like to call it. And I still think that there's going to be renewed retail attention. And as we've seen in past cycles, the most returns come at the end of the cycle. So I think the fact that we haven't seen this massive outperformance and we don't see people flexing their Rolexes and Lamborghinis on the Twitter timeline is actually good. And it means that we have a lot to go throughout this kind of like alt expansion cycle that I hope to see. So that's my hot take, is that the alt cycle at least hasn't started yet. Obviously, we've seen some incredible advancements in Bitcoin and other kind of L1s, but this kind of universal crypto bull run hasn't started, and I think we can still get it.
And if you were to put a timeline to that, what's your horizon for when you think it's going to start?
See, that's a harder question. I guess there's a couple of things I might be curious about. I think like activity coming back to Ethereum would be an interesting signal. I think seeing some direction away from meme coins and into kind of more utility-based projects. I think we have seen kind of the death of conviction, and we need to see more conviction in crypto investors, which, you know, is reflexive, right? It comes back once being a convicted investor becomes an optimal strategy, right? So I think we need to see a kind of combination of factors come back. And I'm watching out for those, but it's hard to put a timeline on these factors.
Okay, that's a very safe answer. I'm going to push you further on that. Give me a month.
I don't know. I think maybe we're looking at like I think fall could still be kind of like this little kind of grind up potentially, or I mean, I think we could see a little pullback this fall. Like honestly, I'm not that bullish this fall on you know, Bitcoin, for example, but I think kind of going into winter, I think that we can see a lot of the tide turning around on stable coins and a lot of technological innovation happening there. The legitimization of kind of DeFi as banking rails. I think there's a lot of stuff. Again, the moving away from kind of this meme coin into utility, which is kind of a controversial take. But I think maybe like early winter, we can start seeing this kind of transition, I guess.
All right. And Justin, overall,
yeah,
what's your...
I can't really, you know, timeline is still hard to say per se, but it depends on where you look at it. I guess altcoin season kind of, it depends. Like when I was trading a lot, altcoin season kind of already happened. Like even like probably 2023. I think that people just weren't trading there. I mean, just look at Solana going up to like $200, right? Solana was like $10, $5 to $10. So like it did like already a 20x. Avalanche did the same thing, like $2 to $40 to $50. So I think that and it caught me off guard as well too, because Bitcoin didn't jump as high before all the L1s and other coins started to run. You know, Celestia went to like $20 at that time as well. So it kind of got front ran, and then afterwards the game started to go pretty crazy. You know, I think that what's very different from this cycle and others is that a lot of the other altcoins now are just whale heavy, right? Like a lot of the VCs and others are just going through their vesting periods, or they're getting the crazy unlocks from FTX to Celsius through the legal everything as well. And so I think that a lot of the coins, the altcoins, were just super top heavy, meaning a lot of the whales and everybody, every time there is a pump now, people are just liquidating. Or in the case where the projects that didn't TGE are finally TGEing now. You know, I guess those projects were, depending on how they wrote the fundraising rules, you know, they unlocked, they allow people to vest while they're waiting right now for some of the locks as well. So I think that what we saw is true to this day too, whether it be meme coins or even in the utility space, is just has been pure PvP in a nasty way. You know, market makers have been super well trained now. And so like when there's a new coin coming, like these people have huge amounts of supply, like what happened in Celestia and everything. And then on the other side, they're just shorting it at the same time, right? So it's been a crazy cycle to kind of see. but I always say too, like I hope, right now, like I'm happy where we at. Obviously, I would want an altcoin season to come, but every month that passes by gets closer to the next halving. And I told people too, from what I already noticed from being in the space since like 2016 or so, or a little bit earlier, is that the shorter timeline from the bear market to the next halving is getting like smaller now. So if there is a bear market, if it happened at the end of this year in the fall, we would only be 2 years away from the next halving, which is not far from the next leg up. So it's like it's not that bad in my opinion, because then now you have again things like aarnâ and others that still, like the APY and APR would beat the bank. So then you just camp a lot of the wins and everything in there, and then just chill, and then you can survive like that winter in the bear market, which actually like a lot of people did. There was just so much liquidity that was still being around compared to other cycles previously as well too. Which again, I think that's what DeFi has allowed us to kind of have happen. But because the market cap now has just kind of grown so much and so big, I really think that there's just a lot of opportunities here, and then because institutional buying is just continue to happen and just propping up kind of like our floor, um, we might
So
just
what's
see like you know
if I'm going to ask you, from 4 trillion, where we are, come January, what's your number for the market?
I mean, I'd still be happy to see like 5-6 trillion, and we would still make significant grounds. I mean, like everybody's waiting on the rate cuts. So the question really, again, is just what's after the rate cuts, because every catalyst that we've had this cycle has pumped it. But then I've always asked the question, what's after that? Like I think we've actually been all waiting for this like the famous rate cut to actually happen. And so I think it'll take a while. Then the market will digest, and then it'll hit. Then we'll have another like next leg up, and then that could be kind of it. But back to what Jack was saying, we have to see kind of like retail come back. My only thoughts and thesis about that is that um, I think that overall, like all global markets, like retail wise, like they got drained because of like Pump Fund and all these other meme coin launch pads. They fully extracted. They didn't. It used to be before where liquidity would return. Like you bought Doge, great, everybody won. All that money went into like PayPay. Then it went out to like Shiba, all that stuff. No, but all the Pump Fund tokens and revenue just went and just disappeared. It gets pulled off market. Same with Trump coin as well. Then you had Kanye come out as well, just drain another $3 billion worth of market cap value. So it's like a lot of the retail just got slaughtered, and liquidity has just been already fragmented and super thin. And that could have been like reinjected, billions, multiple billions could have been reinjected back into the ecosystem and print green kettles left and right, and people would have kept chasing and continue to degen, which used to be how it was back then. But now it's just been like a full black hole where we kind of came full circle, where we would try to avoid kind of like the VC tokens, but it's a much more faster casino as well. So we'll have to see, And one last macro perspective, without going too deep into it too, I just think that overall the whole world, like even if we cut the rates, like I think the whole world is hitting hyperinflation, like behind the scenes. Like I went back to the U.S. I'm from the U.S. originally as well too. Like Seattle's becoming like the number 8 most expensive city, more than Hong Kong even, on a lot of things. It kind of blows my mind on a few different levels as well. So I think that even if we did this rate cut, which Jerome Powell was saying, like they're changing the formula and stuff as well. It's only going to be like a short band-aid that pumps our bags. But if you look at the everyday person in any other country, like that doesn't have Bitcoin and or stocks or equities, that just holding cash, like they need solutions that it beats the current bank if they have even that. Otherwise, they can't even compete with what's happening in the market right now. I think that inflation will just beat out with whatever, even the U.S. dollar in the bank out there, and I think the whole market is going to go up and then just collapse because realistically, like the everyday person that I know from my friends in the U.S. are not like investing at all, and they can barely just pay for their daily expenses from taxes to hyperinflation and everything as well too. And if that's happening in the U.S., then that's just going to be the reality is it's actually the whole world, which I think is just being covered up because everything's so good right now in crypto and equities market. I think everybody just wants to keep printing while the World War III and everything's happening as well. But that's like my very like dark like retail take, and I just don't believe retail is like might not actually come back because like retail, the average retail person that we call retail, just doesn't have any money saved up anymore at all because of like how much things cost, whether it be tariffs to like inflation, tax, or whatever, or collapsing dollar, whatever local currency that is as well, which is happening across the board as well.
Yeah. No, I think that's a sort of a balanced and nuanced take. Yes, all the money printing and that's happening. I mean, obviously, it's going to pump up the markets as well. But it's we're clearly in a very inflationary zone, and that's going to suck out so much of spending power from so many people, and that's going to impact not just the US but everywhere else. But at the same time, it's probably at a macro level. I mean, everything that's happening is in some sense going to delink the whole the strong intersection that's there with the US economy right now, and that's probably going to be a good thing as well in terms of how geopolitics and global economy is currently shaping up as well. So that could be probably one unintended but good outcome of everything that's playing out right now. And like to get your thoughts in on that as well. But just want to kind of probe a little bit more into the sort of crypto markets from here. Even if it's sort of in January it's a 5 trillion or a 6 trillion, we're looking at a 25 to 50% increase in the entire market, and and Bitcoin, obviously we'll see what Bitcoin's dominance will be. But what's the thesis here? Let's just pan out those two scenarios very quickly. I would like to get your perspectives in on that 25 to 50% scenario. Would Bitcoin's dominance stay as it is right now, as where it has been suppressed to a bit, and that's how it will, or will all coins kind of be the bigger driver from here on? And we're talking about short term. We're not talking about 10-year span where
Yeah, Jack, you want to go first and take that?
Sure. Yeah, no, I was just pulling up the total 3 chart. So total crypto market cap excluding Bitcoin and Ethereum. And I think that's almost a more important chart to look at than, total crypto market cap, because let's take your case, right? $5 to $6 trillion. We're at CoinGecko says 3.88 trillion today. So, we imagine that expansion from about 4 trillion to about 6 trillion. Well, maybe we see, half a trillion of that being Bitcoin and ETH, but another 1.5 trillion of that is altcoins, right? And we've seen actually this pattern play out previously in previous cycles where at the end of the cycle, we kind of see a bit of a steady grind up, for things like Bitcoin and Ethereum, while we see explosive runs, across altcoin market caps. So, it doesn't always play out like this, but I think, imagine a 1.5 or that would be 150% increase in the average altcoin. And that includes things like Solana, and that's how people imagine a scenario like Solana to $500 or Solana to $1,000 or the revival of DeFi coins, things like that. So I think the most important, if we compare this to previous cycles and we look at an increasing, total crypto market cap, most of that market cap towards the end of a cycle tends to go towards alts. And alts by nature are the lowest, market cap coins, which means that they'll have the biggest outperformance. So I think that, personally, again, it will be kind of an asset picker's market. We can look to alts to kind of lead performance, and would be, make sure to, just because, I think a perfect example here is, we saw that relative outperformance of Bitcoin for a long amount of time and people being incredibly bearish on Ethereum. I think we're seeing a similar thing happening right now in alts. And I think alts are unique in their ability to adapt to kind of narratives of the time. AI, for example, right? Stable coins is another example. So I wouldn't, count. Some people say that, the supply of alts is so big that they'll be unable to overcome, these kind of massive supply overhangs and VCs holding on to, tokens. But I think I wouldn't underestimate the ability for, these new types of assets to emerge and attract a bid.
Right. Okay. And let me ask you this. So in this sort of a scenario, Justin, what would your personal bags be like? How much would you put in alts? How much would you put in, say, the big ones, Bitcoin, Ethereum, and what would be sort of a proportion into yield strategies? If at a very high level, how would you construct your own portfolio in this sort of market scenario?
Yeah, so like, I mean, everybody's always different. Of course, not financial advice or anything, but like for me, like I'm like still top heavy on like Bitcoin and ETH right now. I guess I did rotate. I used to not believe in ETH until it started moving. So then I started to rotate heavily into there. I think that if the thesis of ETH is going to be strong, the next runner-up is Solana, right? Solana is the only closest other thing to that. And then another surprising one, of course, is, I don't use it, but Ripple. Ripple has just been nonstop. I mean, it's being adopted across like the real normies crowd as well.
But Justin, kind of at a very macro level, the big ones, ones that might raise up.
Yeah, so like for me, it would be like keep like blue chips would be like still like 40% of my portfolio. Aggressively in the alt L1s, I would still put like 30%. And then like the other 30% that I have is combination. Most of it is actually like I would say like DeFi focused. Like 10% to 15% would be stables or so. Always kind of at this point, like from a trading perspective, and then also like whenever there's like a big pump, like ETH hitting like an all-time high, take some profit, man. Like I mean, like there's no reason why not. Like a little pullback, 5 to 10%, and we see this happen every single time now. Like every time there's a big run up, like we've been like taking like one like big steps up, and then it pulls back, like slides. Like Solana's been doing this many times as well too. Like they'll slide 10, 20%, and that's like a perfect time again to buy the dip. So again, whenever a top hits on the DeFi side, you take profits, push that into DeFi, whether that be a stablecoin pool or some sort of pool that is a pretty stable-ish asset. It could be like a BTC, USDC, or other type of pair that you like, that you're still kind of exposed on a blue chip, and then just kind of rotate back. And that's how I've been kind of still keeping DeFi as a strategy, which a lot of people don't think about because they're just going full blown on like either just throwing in casino like in alts or holding it into the L1s. But because we can't really predict like the whole macro of things, like when altcoin season is coming, that's only when you see that full shift of like ETH really running up, then yeah, you don't want to be like holding like other, like you want to go full all in on kind of that rising thing, rising coin. And that's how it might be like with altcoin season. It might just be a game of chairs of heavy concentration of all liquidity chasing run how ETH ran up to like 4,800. Then it could be like Solana's turn, and then Avalanche or whatever, all the other major L1s. It could just be that flavor of whatever. And I think that's what we might see for the big pumps of everything.
And you said anything from a 10 to 20% on a yield strategy.
Yeah, like I think
in that. So
yeah, generally, like like I still love to keep a stable coin pool in there, but it fluctuates. Like again, like the way that I'm using stable coins and a strategy of my stablecoin DeFi is that if I just have sitting capital or I'm just taking profit, then I am taking profit and then pushing it into the yield, so that it just continues to accumulate and grow, right? So when the market dips, great. Like I had this like DeFi pool that is just all profits, almost like taking profit off the top, and then even if it's just chilling, then it's still kind of continuing to grow, right? So and then you can buy the dip and then just keep doing it back and forth again. And if you're not comfortable with that strategy, again, I tell people just like take only a little bit of your TP of whatever bags of the top L1s that you have, and then just push it into DeFi, and then just wait, and then you're just accumulating.
All right. And Jack, what do you agree with a similar sort of, what's your personal portfolio construction like at a macro level?
Sure. I mean, I guess I have a different approach and risk tolerance, and I think my approach is not recommendable to retail investors, but basically what I look to is to have kind of like cash or stable coins to be able to kind of fund my lifestyle, right, and fund my expenses, and my business produces cash, my podcast produces cash. So from month to month I feel pretty good about the cash position I'm in, as well as having a cushion, making sure you have a cushion, and stable coins are in the bank to make sure that you can weather dips, and then have a long-term stack of Bitcoin, Ethereum really for me that I just don't touch, and then other really high upside investments in the form of alt investments, angel investments, smaller caps, things like that, perhaps a meme here and there, but kind of more of like a barbell approach, understanding that my cash position is typically taken care of, and I can always count on my business to produce cash to buy Ethereum or Bitcoin in the case of like a massive drawdown. So that's kind of how I view it. I mean, I think the typical retail investor says, I'm looking to invest 10K or something, I'm looking to invest 5K, 20K into crypto. Obviously, I think that's not a good approach. I think I would look to more like, I don't know, maybe like 30% interesting alts, 70% Bitcoin, Ethereum, or other majors if people are curious about that, along with kind of like another set of stable coins to earn yield on, and to make sure that you kind of are always prepared to buy in or to dollar cost average in as prices fluctuate. But I think it's really case by case and risk tolerance. My dad doesn't want to buy, an AI agent alt on base, and my high school friend doesn't want to buy Bitcoin because he says, what's it going to do? 10x, if he's investing, a couple $100 in capital, it's not that meaningful. So he wants something that, is like a lottery ticket or a moonshot. So I think, horses for courses, different people have totally different perspectives here. So it's hard to give kind of more universal advice.
Right. Yeah. No, obviously a lot of this is sort of financial advice. It's just to understand from you guys who've been in the space regarding how you would look at portfolio construction. Even aarnâ is a DeFi asset management platform, And the whole idea is to create these structures, multiple such constructions. So there could be, so there are alpha generating AI rebalanced portfolio of tokens, which is ATV 808, which has performed very well through the last 5 months of its existence, or our real generation side. So the whole idea is that for a user to be, given the whole fragmentation that exists in DeFi, a user should be able to go to a one-stop platform, which is a full-stack asset management platform, and we'll be able to decide for themselves, depending upon where they are, and how they think about the space and their risk tolerance and everything, and decide on which kind of vaults to deploy into, which kind of strategies to deploy into, without having to go to sort of 10 different platforms. And then that brings me to the yield side. I mean, this sort of a market cycle, and where we are clearly having a yield optimization plan on stables, especially sort of if you are if one is a USDC holder, is important, and we felt that was crucial as well. So, but then when you look at yield, you're always forever trying to optimize yield on multiple, trying to take USDC and sort of deposit, deploy it, stake it, lend it in multiple platforms to generate the best yield. So how do we build a yield aggregation vault, which is ATV111, which is composable, or rather integrated with is a compound Aave on Ethereum and multiple other protocols on other chains, and it switches the USDC from different protocols onto different protocols to generate the best yields. So that's ATV111, and we put a ERC4626 wrapper on top with the ATV USDC, which is the main product. And ATV USDC, with ATV USDC, not only does it reflect the NAV of the ATV111 when you deploy USDC into it and optimizes USDC yield across platforms, but ATV USDC compounds with a multi-layered yield with aarnâ's ASRT, or aarnâ staking rewards token, which essentially gives access to all early deployers to the aarnâ token at our last year seed round valuation in a fair launch design. Then the idea is that all early deployers of capital into ATV structured products also have access to the aarnâ token in a fair launch design at exactly the same valuation that everyone in the seed round had. So that's the design. And now ATV USDC is a composable vault, and it's gone live on Pendle Markets, and it's currently one of the top fixed yield vaults on Pendle. And Pendle users can actually deploy capital and look at depending upon whatever strategy they pursue, whether it is LPs or PT or white trading, can optimize additional yield on top for with their ATV USDC, all for the USDC deployments into ATV USDC. So that's the whole sort of architecture and design of ATV USDC. Optimize yield on multiple platforms, and these are all safe, secure, top-end platforms. And the idea is to get safe, secure, diversified yield, and then have ATV USDC, which also layers multiple yields on top of that, either through the SRT program or through Pendle yield on Pendle Markets. Now, that's the sort of yield design, and I would love to kind of understand from you guys in terms of your sort of whenever you're looking at optimizing your yield on stables, would you sort of how would you look at a structured product like ATV USDC?
You want to go ahead and go first with that, Justin?
Yeah. For me, I guess again, it's kind of like taking a look at the strategies there, and then also kind of like the risk as well too. But the fact that I guess from the ATV USDC standpoint, it's kind of always optimizing and also diversifying across the different yield strategies within the vault. That means it's definitely just kind of layering it across all the protocols out there, and it depends on like which chain as well too, right? Like for me, again, like I'm like I've been super bullish on both DeFi and just like stable coins on Sonic. Just been farming heavily in the ecosystem just because I want to accumulate more points. So I've just been kind of going heavy on that chain as well too, which again, like aarnâ provides like three different types of yields or three different points or stuff that I can kind of continue to accumulate. But for me, again, it's just like the yield matters, and then also risk. Trying to find the lowest risk but highest yield is always my goal. What I want to do, and then find that on like reliable chains as well too. So yeah, I mean, like to me, like looking at like the 100 series vaults has been super interesting with the ATV 111, and then again, like I guess some of the other upcoming vaults as well too. Still super interested to see.
Personally, for me, honestly, I'll say like I'm not the biggest yield farmer out there, not even close. But what I'm most interested in with aarnâ, is from a business perspective and from your guys' ability to address what I think will be a massive, massive market. I guess we lost Shri.
Yeah,
Um,
all good.
I'll continue, I guess. The ability for aarnâ to kind of address the massive market of the growing pie of stablecoins and two approaches that really interest me. First, the ability for a retail user to come in and say, "Hey, I want the best kind of possible yield out there. What can you do for me? Let me just deposit into this vault and forget about it." And I think that's a really, really important use case. Especially kind of for consumers and for retail curious to onboard into crypto and beat inflation, things like that. And I think that there's another use case around the massive kind of growth of the stablecoin market that these stablecoin issuers will be curious about providing yield venues for their users. And I think aarnâ fits elegantly as a place where they can, use the composability and basically the kind of architecture of the protocol to elegantly slot in and offer a yield to their users, with kind of a one-stop shop and be able to access any kind of yield venues that they're onboarding to in DeFi. And I think aarnâ fits very well as kind of a middleman. And I think, yeah, from a business perspective, I think this is a thesis worth pursuing, and that's kind of my personal interest in aarnâ. So that's how I view the kind of stablecoin and yield problem right now.
Oh, we got
Okay,
Shri.
sorry,
Hey, Shri, welcome back.
my connection just died for some reason. I had to sign back in.
Okay,
All right,
welcome back.
I missed. Yeah, thank you. Yeah, I missed that last part, Jack, but I'm sure our quintets carried forward everything. So yeah, yes, on yields, obviously a very very important part of the entire DeFi stack out there. And I'd love to welcome questions from the audience as well. If anyone in the audience have, please feel free to kind of write down your questions, and we'll try to take some of those on. But whilst that happens, if any questions come through or not, I would ask you, what do you think is one of the most overhyped narratives in crypto right now? Justin, you want to go?
Yeah, I'm trying to think overhyped. I mean, Yeah, I mean, like I wouldn't say overhyped. I think that what I wanted to see is more like, yeah, like the integration of DeFi AI. It's not, I wouldn't say overhyped. I just think that the projects out there that was integrating it just wasn't like I think you talked about earlier, wasn't really like really utilizing it to its full efficacy. So that's where, like, again, like we I think we that's the golden grail of what we all want. And in terms of, like, I guess, like, that's the overhyped narrative right now. Yeah, I'm trying to think, like, a new category that come out. I mean, DeFi was hyped a lot, but it didn't really generate a lot of revenue. I think a lot of it right now is outside of meme coins has been which one? I guess just people are still trying to, like, launch, like, super fast chains as well. Like, we still haven't seen Monad and Mega ETH come out yet. I'm not saying it's bad, but the hype has been very long, and so I think it's just going to be. It has been like that narrative will come back again, but then it'll kind of take a pause until there's actually stuff to do on chain outside of that. And we saw that with, like, Barachain and some of these other super hyped projects. And we still have a lot of those, and I think they'll launch during, like, Token 2049 week and beyond. I think that one of the underhyped that still needs to kind of build back up is kind of that combination of DeFi, AI. I think it's making a comeback, a resurgence again, as people kind of see, like, yields is going to play a huge part, especially stablecoin yields. I think is the killer app or DApp that will bridge kind of like the more TradFi and typical retail, especially if we can get to the idea of trying to get mobile apps and other tools that will integrate stablecoin yields. Then people will start putting all their dollars away from their bank to fully on chain. But then again, the banks are eventually going to come as well too, into crypto land and have a wallet as well, which is only, I hope, more competitive and better for stable coins and DeFi in general as well. So.
All right, and Jack, if I were to ask you, what would be one really wild prediction for 2025 from your end?
That's a hard question. I would say I think there's going to be a crypto native frontier AI company that will emerge. I think the AI space lends itself incredibly well to crypto, and I think that we'll either see a massive tech player integrate into crypto, and I don't know exactly what that's going to look like, or we'll see a crypto native company come about that's kind of like a frontier competitor, an OpenAI, Anthropic competitor on crypto rails. That's a little out there, but.
Okay. No, these are both foundational technologies, like we all know. I believe the intersection of crypto is with AI will be along two vectors. One is on the infrastructure side, where and that's both ways, where the entire AI stack, you take data featureization, storage, the entire compute that's needed. So the entire AI stack running on decentralized networks. I mean, what we're calling deepen, for example. I think that's something which could evolve sort of strongly. The other side of the whole infrastructure play is also how AI will make crypto networks more secure, as such, and that's the other part of it. And the second part is really around the application layer, where blockchain and crypto and AI will intersect for applications that make it much more seamless and risk managed and very user focused for users to kind of access DeFi, for example, and aarnâ is sort of clearly building in that space in terms of the application. So yeah, that could be one very interesting space, this interaction. But we've seen this, it's also an overhyped narrative as well. So every time you actually use the word AI in crypto, it's sort of it's all and many times it's sort of such an overused term. So there's a credibility issue around using AI as a word. But very interesting times, and I think we had a great conversation, and awesome to have you, Justin and Jack, on the aarnâ as aarnâ Quintets. I look forward to many more such conversations going ahead. And I think in the next one, I'd love to kind of dig deep into on-chain asset management and how you guys really think that space will evolve in the next one year or so. And maybe I'll leave the stage to you to maybe just give some parting thoughts on chain asset management. Then we can close today's session. Jack, do you want to go first?
Sure. Yeah, absolutely. I mean, to me, I think it was striking to me. I heard the story of a market maker who was helping to clear payments between the U.S. and China for overseas freight or something, and to understand that it's crypto is not just about meme coins or the next wave of DeFi hype, but it's actually at its core holds a base level utility that just is difficult to adopt for regulatory reasons, and in my opinion mostly because the improvements are marginal. However, marginal improvements are the ones that are adopted over time, and I think that I do think crypto rails will eat the world. I think TradTech is beginning to embrace that and understanding that everything will be tokenized, and that a lot of the visions that these crypto optimistic visions that we've seen kind of come out are beginning to be taken seriously by the TradFi world. So I think that the tokenization on blockchains of equities and other financial instruments in the TradFi world is inevitable.
Yeah. And Justin, anything to add on to that?
Yeah, for me, I'm excited still of on-chain assistance and on-chain powered by I guess like AI management as well. I mean, like whether it be for yield, finding the best yields, it's still kind of like the strongest strategy, especially if you're just camping money, letting it accumulate or grow. There is like a number where you could get with enough money and yield, like enough to get a salary's worth every month through finding the best yields and continue to compound and stack as well. I think it's fun to trade, get into the majors and degen on the altcoins as well. But what I've learned from multiple cycles at the end of the day is, well, stack Bitcoin and some of the ETH. But besides that, it's just capital preservation, and that's how you survive bear markets and or even dips in this case. And so for me, again, like if there are, because there's always new chains, new strategies, new protocols, new points programs, new seasons, new incentives, it's really hard to keep up. And if I can kind of put my crypto to work and have it work and have kind of full on-chain management to kind of make those trades or even just some of those suggestions for me, then I'm all for that. I think I'm always doing it manually, and it's just taking a lot of time, and then just being able to move that across all the different protocols and chains as well too. It's just been not as easy to manage. So anything that simplifies that will make the experience better, but be able to like also find like the alpha that's out there, I think. and that's what excites me.
All right. All right. Thank you, Justin and Jack, and have a great time. We'll connect soon.
Awesome. Thanks for having
Awesome.
us.
Thanks for